QQQ ETF. In this video, we would like to go through Invesco QQQ ETF. Please stay until the end.
The power of QQQ ETF.
This video has been structured as below contents. Stock market historical trend. Why QQQ ETF investment? Do you need any expert skill to invest in QQQ? QQQ Net Asset. Performance of QQQ. QQQ expense ratio. Sectoral diversification of QQQ. QQQ top 10 holdings. Risk of QQQ. Best practice of QQQ investing. Summary.
Stock market historical trend.
Stock market return is about 9.79% per year since 1900. For last 10 years it is about 10.41%. For last 20 years it is about 7.64%. For last 30 years it is about 7.52%. So, we can clearly see that even there is short-term volatility in the stock market, however in the long run, it is generating significant returns. We know that market always goes up time and time again even through all of the economic disasters and dips. Even though the market generally goes up, people lose money on the stock market. Because people trend to time the market. They sell when they are panicking, and so they sell low, and then people generally buy when the markets are going high. Research suggests that even 95% of financial professionals can't actually beat the stock market. Therefore, investing in ETF can be a good way to earn long-term profit without any active work.
Why QQQ ETF investment?
Invesco QQQ is an exchange-traded fund ETF that tracks the performance of the NASDAQ 100 index, which is a market capitalization-weighted index of the 100 largest non-financial companies listed on the NASDAQ stock exchange. The NASDAQ 100 index includes technology and internet-related companies such as Apple, Microsoft, Amazon, Google, and Facebook, among others. Invesco QQQ is one of the largest ETFs in the world, with assets under management of over $169 billion as of March 2023. It is widely used by investors seeking exposure to the technology sector and the NASDAQ 100 index. One of the advantages of investing in an ETF like Invesco QQQ is that it provides investors with a diversified portfolio of stocks within a specific index or sector. This reduces the risk of investing in individual stocks, which can be more volatile and risky. Additionally, ETFs typically have lower fees and expenses compared to actively managed funds, making them an attractive option for cost-conscious investors. Many of the companies in Invesco QQQ's portfolio are leaders in areas such as cloud computing, e-commerce, social media, and artificial intelligence, which are all areas of rapid innovation and growth. By investing in these companies through Invesco QQQ, investors can potentially benefit from the growth and innovation that these companies are driving.
Do you need any expert skill to invest in QQQ?
You don't need to be an expert to start investing and building wealth in the stock market. In fact, there is literally one ETF that you need to invest and hold forever. This ETF will help building wealth over long term without a lot of work.
QQQ Net Asset.
As of March 31, 2023, the net assets of the QQQ were approximately $169 billion.
Performance of QQQ.
Over the long term, the performance of Invesco QQQ has been quite strong. According to historical data, the average annual return for Invesco QQQ since its inception in 1999 has been around 20%, although there have been periods of volatility and losses as well. It's important to note that past performance is not a guarantee of future results.
If you would have invested $10,000 5 years ago, your investment would have grown to $17,734, even despite recent volatility.
In the same way, if you would have invested $10,000 10 years ago, your investment would have grown to $44,885 even despite recent volatility.
However, it's important to note that the performance of QQQ, like any other investment, can be volatile in the short term. For example, in 2022, QQQ experienced a significant decline, but it is now in recovering mode steadily. If you buy QQQ at this moment, you are buying it at least 20% discounted price, which might be a good chances.
QQQ expense ratio.
As of March 2023, the expense ratio for QQQ is 0.2%. This means that for every $10,000 invested in the ETF, the investor would pay $20 in annual expenses to cover the costs of managing and operating the fund. The expense ratio of an ETF is an important factor to consider when choosing an investment because it affects the overall return an investor can expect to receive. Lower expense ratios generally translate to higher returns for investors over time, all else being equal. QQQ's expense ratio is considered relatively low compared to other actively managed funds and ETFs, making it an attractive option for investors seeking low-cost exposure to the NASDAQ 100 index and the technology sector.
Sector allocations of QQQ.
The QQQ ETF provides exposure to the technology sector and other growth sectors, as the NASDAQ 100 index is heavily concentrated in these areas. The sector diversification of QQQ as of March 31, 2023, is as follows. Technology, 50.13%. Communication, 16.2%. Consumer cyclical, 15.08%. Healthcare, 6.49%. Consumer defensive, 5.78%. Industrial, 3.88%. Utilities, 1.16%. Financials, 0.65%. Energy, 0.42%. Real estate, 0.22%.
As you can see, QQQ is heavily concentrated in the information technology and communication services sectors, which account for over 70% of the fund's holdings. This means that the performance of these two sectors will have a significant impact on the overall performance of QQQ.
QQQ Top 10 Holdings.
As of March 31, 2023, the top 10 holdings of the QQQ ETF, based on market capitalization, were Microsoft, Apple, Amazon, Nvidia, Tesla, Alphabet A, Alphabet C, Meta, Broadcom, PepsiCo.
Risk of QQQ.
As with any investment, there are risks associated with investing in QQQ. Some of the key risks to consider when investing in this ETF include market risk. The value of QQQ is subject to market fluctuations and changes in the value of the underlying securities in the NASDAQ 100 index. Market risk is a general risk that affects all types of investments. Concentration risk. QQQ is heavily weighted towards the technology sector, which can make the ETF more vulnerable to changes in that sector. This concentration can lead to higher volatility and potential losses if the technology sector experiences a downturn. Liquidity risk. QQQ invests in highly liquid securities, but there is always the risk that the market for these securities could become illiquid, making it difficult to buy or sell them at a fair price. Tracking error risk. QQQ aims to track the performance of the NASDAQ 100 index, but it may not be able to perfectly replicate the index's returns due to factors such as transaction costs, fees, and other expenses. This is known as tracking error and can result in the ETF underperforming the index. Currency risk. QQQ invests in US-listed stocks, which means it is exposed to fluctuations in the US dollar. If the dollar declines in value, the value of the ETF may decline as well.
Best practice for QQQ investing.
Invest regularly. The key to building wealth through investing is to make regular contributions over a long period of time. Consider setting up automatic investments into QQQ on a weekly, monthly, or quarterly basis. Take a long-term view. Investing in QQQ is a long-term strategy. Over time, the stock market tends to grow, but it can also experience short-term volatility. Be patient and stay invested for the long term. Consider dollar cost averaging. Rather than investing a lump sum into QQQ all at once, consider using a dollar cost averaging strategy. This involves investing a fixed amount of money at regular intervals, such as monthly or quarterly. This can help smooth out the impact of market volatility and reduce the risk of investing all your money at a market peak. Stay the course. One of the biggest mistakes investors make is trying to time the market. Instead, stay the course and remain invested even during market downturns. Over the long term, the stock market tends to grow and can provide investors with solid returns.
Summary.
The most important thing is to just get your money invested as quickly as possible, no matter what the stock market is doing, because your wealth would be made over the long period of time. It's also a good idea to consult with a financial advisor to determine if this investment is suitable for your particular situation. Feel free to leave any questions or comments down below, and I will do my best to answer every single one of them for you. This is a brand new channel. If you find any values from this video, please subscribe and like. It will motivate us and keep alive.
We hope to serve you the best.